Hey there, traders. David here of TradingFibs and MarketFi.com to bring you a technical, in-depth analysis of the new T3 moving average that we've been using in the live trading room. I'm going to be go ahead and show you how I've been using this in combination with some other moving averages on the YM, the Dow Futures. As always, these videos are for educational purposes only, to support your knowledge in the market. See what was going through my head on this given trading day for April 23rd, 2015. What we're looking at here is a macro view of the using a 5-minute bar chart with some key support lines. You can see the turquoise line here at the top where price action just barely budged above and really held the line today. That is the Camarilla H4, one of several lines that I keep on my macro charts. Here we can see the 25-minute open range as price action had just huddled a little bit there and broke up to the 1-hour open range and held there until that major bar, which we saw in all four indices, and the breakout above the previous high, which is identified here at 17,976. Again, all these lines plotted for me, most of them pre the open and some of them right at the open based on yesterday's price action. You can see down here we really never went and tagged the low of the day, 17,806. So again, using a 5-minute bar chart, not enough for me to enter into a trade. So I need to look at a more micro view, and so instead of the 5-minute bar chart, now understanding where price action went to, we're going to go ahead and jump to one of the charts that I use, which is going to be, let's see which one I used here. There we go. Alright, so YM, two charts, two key charts here, side by side. What you have here on the left is a YM 10-tick range chart, and on the right here we have a YM 1-minute chart. Moving averages on the left, there are 4 moving averages. In particular, the dashed white line is the 5 exponential moving average. The yellow dotted or dashed line here is the 34 period moving average. The turquoise line at the bottom is the 80, and the bar that you see here in green and then changes to red slightly here with the red Heikin Ashi bars coming down is a T3 moving average. Now there are certain settings to that moving average that we share with our trading room members, but that that T3 is pretty much hugging price there, but you see there's slight difference between that and the 5 exponential moving average. So what is it that we're looking for? Well, number one is this is a moving average that I have been replacing with lately of what I used to use, the 8 exponential moving average. Now you can put up an 8 exponential moving average, get pretty close price action that looks like this, but what I like about the moving average is that as it changes trend, there's a color change. Now you can also see that the moving average, the T3 moving average, also somewhat masks or is in sync with the Heikin Ashi. So if the Heikin Ashi bars are coming down, you can already see that the T3 moving average is color coded in that direction as well. Now again, the study does not call for Heikin Ashi, it actually calls for candles, which are trend bars. As you can see here, I just simply changed it. I decided to, one of the options is to paint your bars on this to show trend. As you can see, the trend is up here. Being an avid user of Heikin Ashi for the trend, I've decided to use those instead. Where I could see indecision, now again, it's one's own personal choice, but it doesn't really pay a huge impact. It's because it's all about the entry. So let's go ahead, a couple entries from today's session. Again, the goal in the trading room is to have 1 to 2 setups prior to the lunchtime. And so here is market open right here at 6:30 West Coast time. And what we have here is we have a 534 crossover, and that means is the white dashed line is crossing the 34. So a 534 crossover, and we have a T3 moving upside, and we have a Heikin Ashi bar solid body tail up. So entry here, at least at the close of the bar would have put you in at 17,894. We're in a long trend here. And if we count up all the way at least to the first red bar, that's a total of about 25 ticks there. Now, one of the trade managements, and there's a variety of trade managements that you can use, is the fact that you can go 1 by 5. If you simply placed your stop right here uh, at the bar number 1, price action would have gotten you 5 ticks and would have continued upside. So 1 by 5 and one runner, you would have had a nice healthy profit there. Now, one of the other stop methods that I like to teach is using the most recent swing size low, which comes into play later in the trading day where you might have been taken out. You get in one bar, price goes up, comes back down, takes you out, and then continues to push higher. So, the average for today's action, for today's price action, out of 13 moves today, we had let's see, there were about 7 moves before the lunch hour, and then about 6 after the lunch hour, about 13 moves in total. An average swing size about 22 ticks on the YM at the swing size, which would have never taken you out. You want to keep a stop closer under bar number 1. The average size on that is about 8.3. So let's just round it to 10. So you're risking 10 ticks on the YM to make ticks to the upside. Now today, based on this strategy of entry on the 534 crossover Heiken Ashi bar solid body and the T3 moving average, we had a total of around 294 ticks. That's right, 294 ticks to the upside and downside as well, both directions. Using the stop swing size, that is 351 total ticks today. 351 total ticks with an average about 27 ticks per move. The lowest obviously was 0. There was one loser on that as it went completely the other direction, but about 6 or 7. We had 2 moves that had about 6 or 7. The highest move being about 66 ticks. The average there somewhere in the 20s. So that's some pretty healthy ticks. So how do we minimize our risk is looking for this setup. Now, what we've added in recently here is on the right hand side you see a 144. That's right, a 144 on a 1 minute chart. And as you can see, these are regular candles, and I left those there to show you that, like always, I just like putting a Heiken Ashi bar, which shows me trend. And so entry setup number 1 here at the market open. You trade, depending on your style, get in, get out, 1 by 5 with a runner. Either way, the setup is there. What do I have? I have a breakup to the upside on the 1 minute chart. To me, that is a wonderful combination where I have a 5 exponential above my T3, of my 34, I'm above my 80 period moving average, and I have a breakout above the 144 here. And so there's your first setup. Now, let's jump to setup number 2, which happened around 46 minutes past the hour of that market open. So it's 6:46 here, West Coast time. And my second setup, as I can see a pullback here, and again, I'm not taking the pullbacks because my 5 is still above the 34. And I can see the same price action coming down here. This is showing price action of bears versus bulls in my mind, and so it's still a bullish move. And so what I'm looking for is the re-entry. And so there's my entry right there at 6:46. The entry at the close of the bar is 17,913 and runs for 49 ticks to the upside. 49 ticks to the upside, and as you can see, price action continue upside. What do I have? That's right, I got a blue Heiken Ashi bar. I got a 5 that crossed the 34 again, sitting above the 34 there, all above the 80, and price action puts me in. Where do I put my stop? I could put it at the stop of below bar number 1. Now you can see in this example you would have been taken out 2 bars later, because if your stop was right at the below bar number 1, you would have been stopped out. And so taking a stop all the way down here, which is about a 20 tick stop, so I'm risking 20 ticks to make 49 ticks up here. That's enough of a risk that I think is fair to let it run. All right, so bullish attitude up into the second move. And as you can see, as price action continues to the side here, we have a 534 crossing here to the short at 717. The entry at the close of that bar would be 17,916 to the short for 13 ticks. Now, you might want to hold off on this entry only because if your bias is that, hey, we're still in a bullish upside, this is more like a scalp. And what is giving me that indicator? Well, that indicator for me at this point is that on the 1 minute chart here on the right, on this 144 EMA, what does price do? It comes and taps that 144, and what does it do? It just bounces. Now, price action continued to break down under it, then I would have looked for perhaps a pullback and then a re-entry. Now, doesn't mean that this setup is invalid. That's right. You have a crossover, solid body, Heikin-Ashi body, and from here all the way down to the low, ran 13 ticks. So one of the techniques we use is 1 by 5, 1 by 10, off with a runner. You would have gotten maybe another tick or two, and perhaps be taken out on your stop, which at that point might have been break even. So a good trade south, however, might have held off on it only from the fact that, hey, I got a bullish bias here and price action holding up above. And so that now puts me into a better trade, or what I would say a higher probability of continue up in trend, because I'm holding in a bullish bias here, holding above the 144 right there, 724. Puts me into a trade on a close at 17,930 for up to 28 ticks. If I'm keeping myself at my 1 bar, I'm risking 10 ticks there. If I come all the way down to the swing size, I'm risking 27 ticks. And that's right, price action tap the 144 and continue to move upside. Now, next entry, you can see the pullback here, 5 still above the 34. I'm not going for the short here, and if I'm re-entering, I have another setup here, bullish, still bullish bias, is price action holding up above the 144 on a 1 minute chart, and there I am, the Heikin-Ashi bar, solid body tail up there at 8:02 West Coast time, puts me in an entry at 17,947 for another run up of 25 ticks. Again, indicators just continuing to show me here that I'm in a bullish pattern, and that's right, crossover again, 5 above 34. Love initial entries, especially after a 5 has crossed the 34 and coming back upside, and run it up for 25 ticks. Simply one off at 5, and then you can let a runner go. You can you can move your stop, different trade management styles. You can wait till it comes out and takes you a break even. It all depends on your trading management. But again, a nice up to 25 tick run there. Our next setup comes at around, as we can see right here, solid body tail up. And if I'm moving the 144 bar, I could still see I'm in a bullish attitude. So again, if you're taking a 1 bar stop here at 834, the problem with that is you would have been stopped out about 3 bars later. You could have moved your stop down here, but to me the most recent swing size high would have most likely been down here. And fair to say this trade might not have worked out. I'm in a bullish pattern here, and so let's move the chart over, and as we can see, look what price action did once again on the 144. That's right, came right down here. So fair to say, most likely you might have kept your stop right down here, 17,940. You didn't get much out of that run. There was only about 7 ticks on that. Stopped out, break even. All right, not a bad trade. You got maybe 5 ticks on that. And so you wait for the next setup as price action comes back down. And am I going to the short? Absolutely not. Why? Price action is holding up above the 144 here. And many of you saw in the trading room today, that's right. Price action just skyrocketed on all 4 indices. And so there again is the nice entry. And again, these are not all at the same time, so you had plenty of time to enter. You had a 534 crossover over on the Heikin-Ashi bar. You had a T3 moving average price trend change here. You can see the green bars. Entry at 17,961, right here at 851, and bullish bias, and there she went for a total of 66. That's right, the highest amount. We came towards the end of the session, we had a move of 60 ticks, but there you go, 66 ticks upside. And so there you are, 7 setups right before, and that's what we're looking at, 1 to 2 setups prior to the lunch hour. Just swing over to the end of the session day. There are a couple of other moves, and here was the end of the session as we saw price action all holding up above the 144, and then breaks downside underneath with a bias to the downside. There you go, price action crossover. All right, you got the 5 T3 trend change, and then 5 crosses the 34 here. All right, and then continues downside, and there you go. You got the price underneath the 144, 1 minute EMA, continuing showing bullish attitude, and that's right, use those Heikin-Ashi bars, keep yourself in the trade. So this is one of the techniques we use. I also like to teach our traders what does it take to stay in the trade. That's by using the Heikin-Ashi bars, and if you have the patience to remain in the trade, sometimes it simply is moving your stop up. And so what are we talking about? Well, let's say we took an entry here as price action moves upside. Where's our stop? Our stop's all the way down there. Taking a little bit of heat here. Now, most likely you would have been taken out here, probably on a stop at break even. And so re-entry here, stop here. Price action moves up. A little bit of chop action. Once we get this nice solid body, we don't have a single solid body, tail up, shadow up, that little stick above on the Heikin-Ashi bar, indicating trend continue upside, and move my stop over here. Price action coming downside, still in a bullish bias on the 144. Move your stop here. And as price action moves upside, all on one trade right there. How about that? That's what we call mastery on the Heikin-Ashi bars. If you can handle yourself and hold yourself in this trade, you would have been taken out here at about post 3.5, 4.5 hours of trading. Just keeping yourself in the trade on Heikin-Ashi bars. And so that's the crux of it, Jedi traders, how we stay in the trade or get in and get out. That wonderful, amazing trade we had here right towards the end of the session with a bullish bias on the 144 to keep in the trade. But it's not really that's what's keeping me in the trade. What was keeping me in the trade is the entry, solid body tail up. That would keep you up to the upside, perhaps taking contracts up along the way, or just simply managing it as you have been the whole session. That concludes today's in-depth analysis of the T3 moving average on the YM. We had the same similar setups on the TF, ES, and NQ. This technique, strategy, works on any market, any chart, any time frame, whether you use 100-tick range charts, works on stocks, works on ETFs. So it's a great pattern to use. Simple setup, nothing much else to follow. But good trading is always going back over your trading day, reviewing the trades that worked out, what kept you in, perhaps took you out too early. My mantra is to know one thing: no well rings true for all markets. So it doesn't matter what you're trading, this strategy will work for you. Look for the trend move. Remaining in the trade is the objective. Remaining in the trend is the objective. It's your patience and discipline that will continue to grow as a trader once you implement these tools. The best part is, as Ben says, new day, fresh start. We get to do it all over again. This is David of Trading Fibs and MarketFi.com signing off for today. Have yourself a Blue Zone day.